Hello, and welcome to Hilltop Wealth Advisors' Economic and Market Update for the second quarter of 2025. I'm Brittany Brinkerhoff, here today with Alex Rankin, and it has definitely been a busy start to the year, to say the least. Before we discuss our outlook for the coming quarter, though, we'd like to talk through some of the questions we've been getting from clients over the past few months. So let's dive right into it. Alex, a question I've been getting lately that I will ask to you is, how have tariffs impacted the portfolios, and how bad has this market volatility hurt me?
Yeah, a comment I've heard numerous times is I'm not even looking at my account. But upon having a discussion, portfolio values have often been higher than the client expected. We've experienced significant volatility and a few very negative days on the back of tariff news, but despite all of this, the stock market has remained resilient. As of early May, the S&P 500 is down about 4% year to date, but this has been a lesson in how quickly things can change. We want to ensure we're prepared for all outcomes and have a strategy for both positive and negative markets. Another question I've been getting is, apart from tariffs, what other policies should we be paying attention to?
Ooh, yeah, that's a great question. So outside of tariffs, there are two big potential policy changes that we're keeping an eye on. One is changes to tax law, with possible income tax decreases if we see an extension of the Tax Cuts and Jobs Act from 2017, or even a modified version of it. The second is changes to interest rates. The Federal Reserve has indicated that they are not going to rush to change interest rates, but as you can see from the green line in this graph, the market is now pricing in several rate cuts in the second half of 2025, which might be increasingly likely if we see signs of the labor market slowing down and/or inflation picking up. But related to inflation and the labor market, here is one question I know we're getting a lot. Are we going into a recession?
Well, possibly, but it's not a given. And we often say that we're cautiously optimistic. Well, right now, we're cautiously cautious. The theme for 2025 seems to be uncertainty, and rapidly changing tariff policies have made it difficult for individuals and businesses to make plans and capital investments. There's always some level of uncertainty in markets, that's not new, but things feel especially uncertain right now. And as a result, global trade is slowing, consumer confidence is low, and inflation fears have resurfaced. Unemployment, while still strong, is softening. And this combination, it increases the risk of stagflation, which is the combination of economic stagnation with inflation and rising prices. So recession or not, there's plenty of unanswered questions. I think the one everyone is asking, what comes next?
Right, that's what it all comes down to. What is most likely to happen over the coming months and years? And it's tough to say for sure, but let's talk about a few of the potential scenarios we could see play out. The good, the bad, and the more neutral. Starting with the worst case first, which would be a global recession. This would likely stem from high tariffs sticking around long term, causing prices to increase and businesses to slow spending and hiring, with the labor market slowing as well. Trade relations between the US and the rest of the world could be affected, and the dollar could decline, all of which could have longer-term impacts. As of mid-April, JP Morgan has estimated that the risk of a recession in 2025 is about 60%, and a period of economic contraction like that would certainly be tough for businesses and consumers.
Yeah. However, it's also possible we see a more neutral outcome, with growth slowing but not coming to a standstill. We've already seen some lowered economic growth targets, but most recently the jobs report outpaced expectations, therefore keeping unemployment low and the consumer strong. As a reminder, personal consumption from people like you and me contributes to over 2/3 of US GDP. Looking to BlackRock, they believe the risk of recession has increased, but it's still not their base case. With constantly changing variables, they're watching how pressure on corporate profits impacts unemployment, whether low consumer sentiment translates to lower spending, and how the cost of tariffs is absorbed into corporate earnings. Risks certainly abound, but there's slow growth would be a better outcome than no growth.
Yeah, that scenario is entirely possible, but then it's also possible that we could see a positive outcome, possibly driven from economic growth internationally or possibly stemming from US policy pivots. So perhaps we have high tariffs now, but in a few months we see an easing of trade and tariff tensions and a shifted focus to tax decreases later in the year, which the market and economy would likely enjoy. So, Alex, given these potential scenarios, where are the possible opportunities now, and how is Hilltop positioning?
Absolutely. Yeah, the decisions made during uncertain times are when you go from a good investor to a great investor. Disruption in markets, it also creates opportunities. So we maintain our favorable outlook on international equities. We think the combination of attractive valuations and a decreasing US dollar, it affirms our belief that international stocks offer some risk-adjusted upside and true diversification from our US positions.
And speaking of our U.S. positions, we are also seeing more opportunity in larger companies versus smaller companies right now in the U.S. This is partially because large cap tends to be more tied to the global economy as opposed to exclusively the domestic economy, but also because large cap has higher earnings growth expectations.
That's right. And additionally, something I've been waiting to say for years, bonds are back. This is a good time to lock in higher coupons for the fixed income side of your portfolio, and we expect bonds to once again act as the ballast and the counterweight to the stocks in our portfolios.
Absolutely. As a whole, though, we will continue to look for opportunities amidst the uncertainty, and we'll continue to focus on the long-term plan. Well, thank you all so much for watching. We hope you've enjoyed this and learned something new. Please feel free to share this video and our contact information with your friends, family, and coworkers. And if you're not already working with Hilltop yet, know that we'd love to help you too. You can simply go to hilltopwealthadvisors.com or scan this QR code and click on the Get Started tab. Thanks so much.